Hello everyone, I am Reena Catherine, Assistant Professor, Department of Commerce, working in Dr. S.N.S. Rajalakshmi College of Arts and Science. Today we are going to see about alternative investment. First we have to know about what is alternative investment. Alternative investment refers to investment options that fall outside of traditional assets classes like stocks, bonds and cash. These assets often offer different risk, return and liquidity profiles and are typically used to diversify an investment portfolio. Let's see the examples of alternative investment: real estate, private equity, hedge funds, commodities, cryptocurrencies, collectibles, venture capital. These investments tend to have lower correlation with traditional assets classes, offering opportunities for higher returns or risk mitigation. But they may have also come with higher risk, less liquidity, and larger investment options. First one is bonds. Bonds are debt securities where investors lend money to governments or corporations in exchanges for regular interest payments and the return of principal at maturity. They are low to moderate risk and provide steady income, making them suitable for conservative investors. Second one, equity shares. Stocks represent ownership in a company, offering potential for high returns through capital appreciation and dividends. They carry high risk due to price volatility but are ideal for investors seeking long-term growth and willing to take an market fluctuations. Third one is preference shares. Preference shares offer fixed dividends and priority over common stakeholders in case of liquidation. They combine features of both debt and liquidity, offering moderate risk and stable income, suitable for those seeking reliability without the volatility of common stocks. Fourth one, government securities. Government securities are lower risk debt instruments backed by government. They provide stable but lower returns, making them ideal for conservative investors looking for safety and steady income. And fifth one is mutual funds. Mutual funds are pool money from many investors to invest in a diversified portfolio of stocks, bonds, or other assets. Managed by professionals, they offer diversification and liquidity, catering to investors looking for a hands-off approach with varying risk and return potentials. Sixth one is real estate. Real estate involves investing in priority to property to earn rental income and capital appreciation. It offers stability and long-term returns but lacks liquidity, can involve high upfront cost and maintenance. Seventh one is gold. Gold is a safe haven investment instrument used to hedge against inflation and economic stability. It is a low risk asset that does not generate income but appreciates during uncertain times, ideal for those seeking stability and wealth protection. Eighth one is silver. Silver, like gold, is a precious metal but tends to be more volatile. It can offer higher returns but carries higher risk. Silver is a good option for investors seeking diversification within precious metals with a higher risk and tolerance. Each of these options has its own risk and return profile, and the right choice depends on your financial goals, risk tolerance, and investment time frame. Therefore, alternative investments refers to investment options that fall outside of traditional assets like stocks, bonds, and cash. These assets offer different risk, return, and liquidity profiles and are typically used to diversify an investment portfolio. Some examples are real estate, private equity, hedge funds, commodities, cryptocurrencies, venture capital, and more. These investments tend to have lower correlation with traditional asset classes, offering opportunities for higher returns or risk mitigation, but they may also come with higher risk, less liquidity, and larger investment horizons. Real estates are physical properties, private equities are investments in private companies, hedge funds are pooled investment, commodities are precious metals, cryptocurrencies are digital currencies.